The best moving average strategy. It's an interesting title, and maybe it is, maybe it's not. Okay, but your search for the best anything is actually holding you back in trading. And what we're going to cover today, it's a strategy, it's viable. And before we do, though, I'd like you to hit the subscribe button. I'd like you to like this video if you do. Any questions or comments, you can always put them below. And the disclaimer is also available. This is not financial advice. Obviously, you got to do your own due diligence. And look, the fact is there are a lot of different ways to make money trading. Okay, not all profitable strategies are complex strategies. In fact, the best moving average strategy that I know, it's simple in its construction. And best of all, there's an actual edge in it as it takes into account trend direction, price action, and an increase or a decrease in the average prices. Now, it's not going to matter whether you trade crypto, Forex, futures, stocks, doesn't matter, because this strategy is going to apply to any market, any liquid instrument. And one of the biggest mistakes that you can make is to ignore the power of a simple pullback against the main trend. Okay, these actually set up reversals back into the direction of the overall trend. And your order entry technique is going to ensure that short-term price movement is in your direction with this strategy. Let's take a look at what this strategy is going to look like on a chart. It's clean, right? Not a lot of lines or indicators at all. The two lines are our moving averages. The settings are a 9 SMA and a 20 SMA. And I know I'm going to get this question. Can you use EMAs? Can you use a 10 period, a 21 period? The answer is yes. This strategy is robust. Okay, minor changes are not going to have much of an effect on it. Now, if we start to use longer periods for the averages, like the 50 or the 100 period moving average, then yeah, we're looking at a totally different strategy. Now, there are a few important price movements that you have to know for the basic approach to this strategy. Okay, because I'm going to show you two different ways that you can trade this. So the first one is a pullback. Now, on the right of that chart, that's more of a simple pullback, meaning one swing down in the uptrend. For the complex correction, we want to see a second high that's a little more obvious, as you can see here. Make no mistake, pullbacks are a viable edge when you're trading in the direction of the trend. And we're going to design an entire strategy around that as part of this strategy. The other one to keep in mind is a setup candle. Now, on the left side of the chart, that arrow highlights a setup candle in this strategy for a downtrend. An uptrend's the opposite. So for the example, in a downtrend, we just want to see this type of candle to set up our trade entry. But the main thing to note is the closing position. The closer to the lows, the better, because it shows that the sellers were strongly in control for this period. Now, anywhere near the 25% of the candle to the lower or the high is close enough. And you can use 2-bar pullbacks, 3, 4, 5, whatever you want to use. So essentially, if you're looking for a long trade, you're going to require, let's say, 3 candles of lower highs. And then you're going to look to take a trade off of the setup candle formation. Okay, we're going to show that later. What do the moving averages do? Well, the two moving averages, they're showing us the average price over the set look-back period. Mean reversion is a function of the market where moves, after a period of time, will tend to reverse to an area around an average price. So for our strategy, trend direction will be determined by price closing at least 3 times above or below both moving averages. And it doesn't need to be consecutive higher or lower closes, okay? Just above or below the averages. So when we require 3 closes above both averages, for example, it can help us avoid, but it's not going to eliminate, trading inside of choppy markets. Now, the closes do have to be consecutive closes above or below the average. So if we have 2 closes above the average and then 1 below the averages, we got to start that count all over again. We can also use these moving averages and the price relationship to the averages to determine if we can expect a deeper pullback or a consolidation, right? Overextended price action. This is not a part of the basic strategy, but it can give you a good overall feel for the instrument that you're trading. And this, when you have more experience, may actually impact your trading approach. Looking at this chart here, the other price moves were pretty orderly. But then we get to the right of the chart. It's an obvious move. It's a lot different than the other moves. And at this point, something has certainly changed in this instrument. So we can expect to see a deeper pullback or a range form. Okay, these are the points that you'd expect to see a complex correction show up. That black arrow on the left is another example, okay? But it's not as obvious as the one on the right just because of the scaling of this chart. But that was almost a 30% move up in price. Then we had a consolidation form that digested that move. So let's recap what we've covered so far. You've learned the type of moving averages to use, as well as minor changes can be made without affecting the overall strategy. Pullbacks are going to come in two forms, simple and complex, and it's one of the setup patterns that we will look for. The setup candles are another setup that we can use when looking to trade in the direction of the trend. Our moving averages, they're going to be used alongside price to determine trend direction and a market that may be due for a deeper or a longer correction. So let's start from scratch, cover the strategy. We're going to walk through some examples. Now, here's a little tip for you when you're testing any trading strategy. A good way, a quick way to judge if it's worth considering is to use the 1-hour testing criteria. So when you use this technique, you're just looking for 1-hour profit targets on the trade. So if price is able to move 1 times your risk, there's no reason to ever let it turn into a losing trade, right? It's a successful trade. So you may already have a good strategy, okay? But you're always trying to hit home runs instead of just taking a base hit when you're thinking of taking profits. So you may already be on the road to success. So to show an example of 1-hour testing, okay, this is just one part of the strategy that we're going to talk about and you'll learn. So you enter at the break of the high of the setup candle. We're going to go over that again. The stop loss will go below the low of the setup candle. And the difference between your entry price and your stop price projected from your entry is 1R. And you can eyeball the length of the entry setup candle once you've done this enough. It cuts down on wasting time looking at a strategy that can't even get to a 1-hour target. So now we're going to walk through it. And this is a daily stock chart of EGY. And it shows several different trades using the two setups. And I'm using 1-hour targets, although there are many ways you could take profits, including trailing stops. So our first trade is a short using the candle pullback method. I like to see 3 candles in the pullback. Some prefer 2, some prefer 4. Doesn't matter. Pick one. In a downtrend, these candles must make 3 consecutive higher lows in the pullback. You can see the 1-hour target was just hit and then price rallied. See our trend changes, and then we have a second trade. The trend changed because we had 3 closes above the average. So we get 4 lower highs, right? So I get more than what I need. I get a perfect setup candle that closes near the high. On the 6th day, the 1-hour target's hit. Now the third trade is another great setup. It's a 4-bar pullback. And although the bar does close red, the closing price is close enough to the high of the session. It's only off by 7 cents, so it fits my 25% criteria. At trade number 4, now we see price had moved further above the shorter term average. We also see that short term average moving away from the longer term average. Something's changed. So this is where we can expect to see a complex pullback, as something has changed in the market. So I use the break of the downtrend line for an entry. You can also use the setup candle method of entering. It's up to you. So depending on your entry, off a pullback reversal, your stop is going to either be under the swing of the flag for a long or the low of the setup bar for the method. Let's look at a setup candle, an inside bar type. And there's going to be times that you get a great setup candle and it's an inside bar. So let's look at trade number 4 as an example. Whether you're using a flag pattern or the setup candle technique, inside bar setup will have the stop loss going under the mother bar candle. Okay, it gets it out of the trading range. Look at Bitcoin, and there's been a lot of extreme moves in Bitcoin. So it's a good chart to see how this strategy stacks up against these kind of markets. The blue lines obviously represent our trend direction changes. Okay, so the first trade's a bear flag. It gets triggered off the trend line break. 1-hour target easily hit with the momentum pushing down. The lows also had momentum. And as mentioned at the start of this video, big moves will generally see mean reversion. Okay, so traders should be on alert for a complex pullback. Trade number 2, it's a long trade using the setup bar method. We have 3 lower highs and then the setup bar. Triggers in, boom, 1-hour target hit. Now, as you see on the right, Bitcoin's choppy and our trend change rules keeps us from looking for setups. So what setup are you going to use? Because you have a couple. Now, every strategy is treated a little bit differently by each trader, no matter what it is, because each trader is going to see the movements in price a little differently. But we can give some general guidelines as to what setups to use at a particular time. But in the end, okay, it's just how I personally see things based on my experiences and my thoughts about price movement. So using the flag pattern and the last chart, and we're going to look at the first trade as our example. There's a reason why we use that flag. The reversal off the low is pretty strong. Okay, it's shown by the closing price being near the highs of the reversal candle. So this often means that the pullback will be a little less orderly. So the pullback does start off promising for the setup bar method. Okay, we get 2 higher lows, but then that red bar breaks lower than the second bar, stops the count. So now we need to resort to drawing a trend line for a complex pullback. Now, this is not a perfect complex pullback, okay, because price does fail into a trading range for a bit, but it's close enough for you to get the idea. So the main point is that the setup bar strategy was canceled, and then we look for a flag pattern for the potential trade. See how we can use both of them together? Now, using the setup bar, looking at the same chart, we see an orderly pullback that puts in 3 lower highs, okay, which is my rule for the pullback in an uptrend. I need 3. The red arrow points to the 3rd lower high, and it's an inside bar. Now, if that bar had closed near the highs, we would have gone long on the break and used the low of the mother bar for the setup. The next bar closed up with the closing price in the upper quarter of the bar. That's our setup bar. This is a currency chart, 1 hour. And I'm showing this chart because of the large setup bar. And it's a valid trade. And it's a lot larger than the surrounding bars. So the stop is going to be wide. So price would have to move quite a distance to hit its 1R. In this example, price did not travel the 60 pips, which is the difference between the entry and the stop loss. And a trader would be sitting through grinding price action before hitting the target. So this is a decision as a trader you have to make for your plan. Do you trade these kind of bars that are standing out like this? Personally, I skip them, right? You can clearly see the other setups all reached 1Rs. And the trade on the right is still underway when I'm making this video. Well, trailing stops. I know there are going to be those that want more than 1R, and that's fine. And trailing a stop is a potential technique. You can use X bar stop as your protective stop loss under the 1, 2, or 3 bars back. Use the lows for a long. You can use the moving averages, either the short or the longer period. You trail your stop under the average or around the average. That could be an idea as well. And I'll be honest with you, you may find that a trailing stop adds very little to your strategy. And that if you would have just taken profits around 1R, you would have had a better win rate and better gains overall. So go back and check that. So let's recap. We want to see price having 3 consecutive closes above or below both moving averages for the trend direction. You have to decide how many bars are needed for a pullback using the setup bar method. I use 3, but you can use any number you choose. And there is some arguments why 2 would be okay, especially in a fast moving market. If the setup bar technique is canceled, we want to look to trade a flag pattern, right? Bull or bear flags. Stop loss will go in a different location depending on the strategy. If you're using flags, the stop is going to go below the low of the last swing. In an up, use the setup bar strategy. It's going to go below or above the setup bar depending which direction you're going. Inside bar setups, right? Stop loss goes under or above the mother bar. Consider taking 1R profits on the trades or 1.2R profits to cover commissions. So is this the best moving average strategy? Well, let's be honest. With the amount of strategies that are available to a trader, it is impossible to say with any confidence that this is the best. I will say that it does take into account the tendency of the market to mean revert. You are triggered into a trade after a certain number of bars in the pullback as price resumes the trend. You're able to determine whether you're trading a complex pullback with a flag or a simple correction using the setup bar method. It'll do a decent job of keeping you out of choppy markets as we saw with the Bitcoin chart. Most of all, the entry and the stop loss is an objective price, with many of these trades hitting 1R targets. And if you go through some charts, I think you'll find the same. Now, the truth is this, and I'm sure you've all heard it and read it, only take 3-to-1 reward to risk ratios. The truth is you will never know when you get into a trade if it's going to hit 3R. You're going to get many, many, many more 1R winners in your trading than you will 3R profits. Now, I use a form of this strategy in my own personal trading. Okay, so the guidelines above are just guides. So you may be excellent at reading price action and only require a 2-bar pullback, right? So you have to know what you are capable of as a trader and your experience level. I urge you, take some time, do the 1R test, build out some trading rules. Let's see if it's something you could do well with. Appreciate you watching. As I asked before, I'd love for you to subscribe, like this video, questions or comments. Want me to clarify anything, I have no problem answering questions. Thanks for watching.